If you're recruiting for any of these roles, you're probably going to get asked some accounting questions in your interview. So let's go over 5 of the most common accounting interview questions from level 1 as the easiest all the way to level 5 as the hardest. First up, in level 1, we've got a relatively easy question, which is what's the difference between cash and accrual accounting? The key difference here is how the revenues and the expenses are recorded. If we take a look at the table below, under cash accounting, the revenue is only recognized when the cash is received, regardless of when you provided the product or service. However, under accrual accounting, it's only when the revenue is earned, so when you actually provided that good or service. Then for the expenses, it's when that cash is paid, whereas for accrual accounting is when the expenses are incurred. This might still seem a bit confusing, so let's go over an example to clarify further. Suppose we run a gardening service and we've just performed the gardening job today. That said, the payment is due by the client in 30 days time. So when should we recognize the revenue? Option 1 would be to recognize it today as the work has been performed, or option 2 is to recognize it when the client actually pays us in 30 days. Under accrual accounting, it would actually be when the work is performed, so that would be on day 1, whereas under cash accounting, it would be 30 days later when we actually receive the cash from the client. Generally speaking, accrual accounting is much more common, especially for bigger companies, whereas cash accounting is more common for smaller companies or even individuals, as it's a lot simpler. Awesome, that's level 1 done, and now moving up to level 2, and here we have walk me through the 3 main financial statements. So as a quick refresher, the 3 main statements are the income statement, the balance sheet, and the cash flow statement. So let's take a look at each. The income statement shows you a company's financial performance over a certain period, like a year or a quarter. It's gonna tell you the company's sales or the revenue, subtract any of the expenses, and finally reach the profit or net income figure. Secondly, the balance sheet provides a snapshot of the company's position at a single point in time. So on a particular day, it shows the company's assets or what it owns, its liabilities, which are what it owes, and what's left over, which is assets minus liabilities, and that's equals to the shareholders' equity. Thirdly, we've got the cash flow statement, which shows how cash is moving in and out of the company. It's broken down into 3 main sections, which are the operating activities that tell you the cash flows from the core business operations, the investing activities, which tells you the cash flows from buying or selling assets like property, plant, and equipment, and finally the financing activities, which tells you the cash flows from borrowing debt, issuing shares, paying dividends, and other financing activities. Great, that's level 2 done, and now we can move on to level 3. And assuming you've answered the previous question correctly, a common follow-up question is going to be if you could only pick one financial statement to evaluate the health of a company, which would you choose? The answer is the cash flow statement, so let's go over why that is. The cash flow statement provides the clearest picture of a company's ability to generate cash, which is essential for doing things like paying for debt or meeting any other obligations. The reason it's not the balance sheet is because it only captures a snapshot at a single point in time without showing that flow of cash, so the company's ability to generate cash flow. And it's not the income statement because even though it does give you information about profitability through the net income line, it does include some non-cash line items like depreciation, which can actually distort the true value of the company's operating profitability. Also, if we look at the cash flow statement here on the side, you can see that net income line is also available in the cash flow statement if we're using the indirect method as the first line item. Alright, now moving up to level 4, and this is probably the most common accounting interview question. Let's take a look at it, and it says, how are the 3 financial statements connected? Overall, there isn't one specific answer here. There's actually a lot of different connecting points, so it's important to mention a few of them. Let's take a look. The first connection that comes to mind is depreciation, which from the income statement as depreciation expense connects over to the balance sheet under non-current assets. This is because it reduces the value of non-current assets like property, plant, and equipment. So for example, a building gets depreciated over time, which reduces its value. Then that also affects the cash flow statement in the form of depreciation. That's because depreciation is a non-cash expense, that we need to add back to the net income figure. Perhaps more indirectly, the depreciation could also affect capital expenditures in the sense that if assets depreciate over time, we might need to buy some new assets in the form of capex. Another important connection has to do with net income. Net income from the income statement connects to the cash flow statement through that net income line. It also connects to the balance sheet through retained earnings. That's because if you recall from accounting, the formula for ending retained earnings is beginning retained earnings plus net income minus dividends. So that plus net income obviously affects the equity portion here. I'd say those are the two most obvious connections, but there are some other ones. For example, we've got the current assets and current liabilities that connect the balance sheet and the cash flow statement. More specifically, they connect to the operating activities section. Also, the balance sheet cash line item under current assets would link to the beginning and ending cash balances of the cash flow statement. As you can see, there's quite a lot of different connecting points, so it's important to at least know a few. Finally, moving up to level 5, and this is among the harder questions there are, we've got how would a $10 increase in depreciation expense affect the three financial statements? Keep in mind that usually you'll have to do this calculation in your head. It's not like you can write it down on pen and paper. So let's take a look at the effects, starting with the income statement. As it says in the question, depreciation is an expense, and so because of that, we're gonna have an increase in depreciation expense on the income statement. As for what that means for our pre-tax income, that's gonna go down by $10 given that increase in expenses. That said, we need to assume that there's a tax rate, and let's assume that's at 20%. With that, the net income is then reduced by $8 because 10 times 1 minus 0.2 or 10 times 0.8 is actually $8. So because our pre-tax income gets reduced by $10, our net income actually only reduces by $8. Then we can move on to the cash flow statement. And if we know that the net income was reduced by 8, that's the first line item. But now we have the depreciation expense that we need to adjust as it's a non-cash item. So that means we need to add it back, so plus 10 there. On a net basis, the net change in cash is a simple plus 2, and the ending cash is also just a plus 2. Finally, on the balance sheet, that net change in cash is going to increase our current asset balance by 2 because cash went up. However, that depreciation expense means that our non-current assets are going down because they're getting depreciated by $10. All in all, that means that our total assets go down by $8. That's the asset side, but we need to make the balance sheet balance. If the assets went up or down, so should the liabilities and equity side. And for us, it actually affects the retained earnings. If you recall that minus 8 in net income is gonna affect the retained earnings balance. With that, we'll reach the total liabilities and equities of minus 8, which makes everything balance as total assets went down by 8, and so did total liabilities and equity. If you've struggled with some of the concepts here, you probably need to take an accounting course or at least refresh your memory. And a great way to do that is by taking our Financial Accounting Essentials course, which you can find in the link in the description below. Here, you'll learn to record transactions and eventually build the three main financial statements from scratch on Excel. Once you're comfortable with the three main financial statements, we'll move to financial statement analysis, where you learn how to analyze and interpret key ratios for companies to spot their trends in profitability, operations, and more. Finally, you'll have an in-depth case study to practice all of the financial accounting concepts you've learned. We realize accounting can sometimes get complicated, so if you get stuck along the way, you can ask our course instructors any questions on our discussions forum. So if you're interested in learning more about this course, head over to the link in the description below. Finally, as a bonus, we've just looked at the technical accounting questions, but in an interview, you're probably also going to get asked some soft skills or non-technical questions. So let's take a look at them here through 5 of the most common non-technical questions you should prepare for. The first one is just walk me through your resume. This is a question that you're probably going to get asked in every interview. That said, I'm not going to answer it as it's quite personal to your story. Secondly, we've got where do you see yourself in 5 years' time? Here, try not to say anything too strange, like living in an island isolated from the world. Probably keep it fairly standard. Thirdly, why do you want to work in accounting? Obviously, you'll have your own personal motivations, but try not to say money or that money is a key factor, as that can be off-putting for the interviewer. In number 4, we've got a bit more of a scenario-based question with tell me about a time you worked as part of a team to complete a project. In many of these accounting or finance roles, you're probably going to be working as a team, so it makes sense to ask that and you should have a story ready. And finally, we've got how do you prioritize tasks when handling multiple deadlines? This is important to showcase your competence by answering it well. And one example you could use, especially if you're a student, is demonstrate how in finals week, where you have all of the different exams and all of the deadlines, you're able to prioritize some and stay organized. Speaking of interview questions, if you struggle with brain teasers and mental math, you should check out this video over here for some tips. Or if you want to break into the business or the finance industry, you should take our course over here. Hit the like and the subscribe, and I'll catch you in the next one.